What's going on, guys? Hope everybody's doing well. One of the areas that I really don't get into very much is the legacy financial world and some of the, how do I put it, drama that's going on in the legacy financial world. Ever since the recession, the Great Recession of 2008, 2009, there's been a bank that has been kind of in the crosshairs, so to speak, of people that know that this bank in particular is really holding on to some toxic assets that were kind of shuffled over to the bank that other banks were holding during the financial crisis in 2008. And that bank is Deutsche Bank. It was just announced, I believe it was just a few hours ago, actually might have been a couple days ago, that they're going to be cutting 18,000 jobs by 2022. This article in particular is trying to say that Bitcoin is actually having an impact. That might be true. I honestly just think that if Bitcoin and distributed ledger technology never existed, the fiat legacy financial institutions would fall eventually anyways. I mean, something like the history of fiat currency is not a good one. They all collapse given enough time. And this is all stuff I'm sure you've all heard of as you've gone down the rabbit hole of crypto. But so this article is trying to say that Bitcoin is disrupting banking and this is having an effect on banks like Deutsche Bank. But I really more wanted to get into what might happen if something does happen because of a bank as big as Deutsche Bank goes under, and how being involved in the new crypto financial markets could actually help you in that regard. Not financial advice, but it is kind of a hedge against some of this stuff, as is gold and other assets that are not connected so as much to the legacy financial system. So I'm going to just go through this article really quick. We're going to take a look at the stock, and then there's a nice little blurb here I wanted to specifically about the derivatives and what could happen if the bank did fail. Throughout history, the banking industry has always been vulnerable to a range of risks, but somehow it has been able to survive over 3,000 years. But now traditional banking is increasingly under the threat from geopolitical uncertainty and, most significantly, from the advent of new technologies, including artificial intelligence and Bitcoin. As a result, behemoths like Deutsche Bank are now undergoing efforts to radically transform their business model. Might be true, maybe. I'm not going to count it out, but I don't. Market cap of all of crypto is not nearly as big as it would need to be to actually start really affecting the bottom lines of some of these giant institutions. New technologies may have already profoundly disrupted existing banking and financial systems. Some banks are taking drastic steps to ensure that they survive by trying to catch up on innovation. The most recent example comes from Deutsche Bank. Its management is aware that digital is on the rise, no getting away from it. Thus, on July 7th, 2019, Deutsche Bank CEO Christian Sewing admitted that 150 years after its founding, the bank now has to be rebuilt in order to survive. Sewing stated. The rebuilding will, however, only be successful if we fundamentally reshape our infrastructure, all of the cross-divisional functions supporting the businesses. To achieve this transformation, among other things, Deutsche Bank plans to invest 13 billion euros in technology by 2022, while cutting 18,000 jobs. I'm not trying to say that new technology didn't have a role in possibly the downfall, but as you'll see from when I bring up the stock, they were declining pretty much right after. They really never recovered from the recession, and it seems kind of like a scapegoat to be like, oh, it's because of this technology, that's why we're failing. It doesn't really seem like a well thought out answer on why they need to rebuild. Sure, they could rebuild with automation and everything, and But that might help them stay alive. That might help them stay in business. But the reason why they failed is probably more to do with the fact that they were really never built on a model that could work to begin with. The article then goes into something that Christine Lagarde, the European Central Bank lead, was talking about with Bitcoin. Banks have always faced risks such as credit risk, liquidity risk, and interest rate risk. Problems can also be triggered if a bank faces too many liabilities and lacks enough cash to satisfy those liabilities when they come due. Moreover, geopolitical uncertainties can also trigger an enormous financial crisis. Deutsche Bank estimates that the impact of the US-China trade wars has already obliterated over $5 trillion US dollars from the financial market. And again, this just seems like another scapegoat. Like, oh, we know that the US has been fighting with China on these trade sanctions and these talks, so let's blame it on that, instead of actually kind of pointing the finger at themselves and saying, hey, we screwed up. Usually governments have been willing to rescue banks during the crisis, especially if they were big. The too big to fail systematic policy was highlighted during the 2008 financial crisis. But now perhaps the biggest threat to the banking industry is posed by the fact that your Bitcoin wallet is your bank. In this regard, Christine Lagarde, managing director of the International Monetary Fund, has already sounded the alarm. In April 2019, Lagarde told CNBC that cryptocurrencies and financial technology developments are clearly shaking the banking system. And she added, "We do not want innovation that would shake the system so much that we would lose the stability that is needed." Lagarde will continue to have a position of leadership in the world banking system. As reported by Bitcoinist, she has been nominated as the new president of the European Central Bank. Most likely, many other banks will start re-engineering their processes and reducing their large workforces, as Deutsche Bank is doing. However, unlike during other financial and banking crises, this time Bitcoin is around to deftly handle the ensuing global economic slowdown. Moreover, folks who have been shown pink slips in the traditional financial services industry will find an opportunity to start again with jobs paying in Bitcoin, which they can hold as a real robust store of value and also use for payments. I doubt they'll do that. We're talking about legacy financial people here. They still think crypto's a joke. At least I would say a lot of them do. Maybe the ones on the forefront are actually aware. But yeah, I don't think that at least there might be some technology in the fintech world. Some of the automated machine learning, you can call it AI, some of the algorithms, those might actually have something to do with automation that's happening in other banks that's making Deutsche Bank not able to compete, which is why they need to lay off people. That could be true. But I really don't think that Bitcoin or crypto is at the point yet where it's actually having an effect on a bank the size of Deutsche Bank, even the smaller banks, which are still very large. But if you look at the stock of Deutsche Bank, this is, I'll show you the max here. So this is, you can see the sharp decline here. So right during the financial crisis, it dropped, down to $24. And that was, then it got, the bailouts, which helped it go up here. And then it's just been dropping ever since. I mean, it hasn't seen these prices ever again. So it was at 74, 77 as a high. And from that point on, it just continues to go down. And at this point now, it's at 803, which is a little bit higher than it was. I think it's weird with the stock market. Anytime a company announces layoffs, the stock does go up. They might have had to do that in order to prevent their stock from going even lower. But you can see that the stock has been dropping pretty much ever since the financial crisis happened and hasn't really recovered. So I don't think that digital assets really had any impact on this. But what would or could happen if Deutsche Bank does fail? And this is pretty interesting here. Deutsche Bank currently holds $45 trillion in derivative trades with other institutions, and some sources and analysts are beginning to compare it with the Lehman Brothers investment bank collapse in 2008 in the US. Like Lehman, the derivatives connection is the historic channel through which contagion and asset value collapse is transmitted across other financial institutions, leading in turn to a general credit freeze across multiple financial markets in Europe. The giant U.S. insurance company shadow bank, AIG, overissued and held trillions of Lehman derivatives, which it could not pay Lehman when it collapsed. Deutsche Bank may thus represent a kind of Lehman AIG in a single institution. Whether the European Central Bank could successfully bail out Deutsche Bank in the event of a crash is another related question. Unlike in 2008, the European Central Bank is no longer in a strong position to do so. Its policies since 2015 of quantitative easing and driving down government interest rates to negative levels may mean a Deutsche Bank bailout could intensify a European crisis. A European Central Bank bailout might inject even more liquidity into the European banking system, driving interest rates significantly further into negative territory. They're currently, I believe, in negative territory already. Negative interest rates already range from 64% to 69% of all government bonds in Europe. That's crazy. And then the reader actually asked a question about Deutsche Bank here, which was actually a pretty interesting question. The largest bank in Germany is Deutsche Bank, and it is also the largest bank in the European Union. Its stock has been plummeting. It laid off 20,000 employees, and I noticed that its PE ratio is 600 to 1, which means it's earning about 10 cents per share. It seems like it is getting close to being a zombie bank. The bank, however, has $45 trillion in derivatives, and these appear to be heavily interconnected to U.S. banks. Can a bank be too big to fail and too big to save? If it goes under, is there any chance of contagion? Can a bank collapse and yet leave its $45 trillion in derivatives unaffected? On a scale of 1 to 10, what are the chances of a Lehman collapse and global contagion with Deutsche Bank in your view? And this is the author's reply. The percentage potential for collapse is probably around 7 out of 10 should the next recession hit Europe. So I think there's no question there's going to be a recession because there's always a recession about every 10 years. We're overdue for one. And a 7 out of 10, I mean, everybody knows math. That's a 70% chance of it hitting, of Deutsche Bank collapsing if the next recession hits Europe. So that just tells me it's just a matter of time. It also depends, of course, on which institutions are counterparties to the $45 trillion. That's unfortunately not knowable because of the opacity of derivatives contracts, and it also depends on how financially fragile other institutions are apart from the Deutsche derivatives connection. My view is that European banks and financial institutions are quite fragile given the trillions of non-performing loans, negative rates, etc. Along with certain emerging market economies, sovereign debt, loads, India's shadow banks, leverage, and NPLs, and China's debt, Europe banks may prove the next locus of the global financial crisis on the agenda. That more general financial fragility, and thus instability, would certainly raise the probability of Deutsche Bank repeating the role of Lehman in the next crisis. In short, you can't evaluate Deutsche Bank just in relation to its and its counterparties' derivatives exposure. Contagion will not occur just within a certain subset of banking system. It will soon spread via expectations to other sectors of the credit system, as it did in 2008, and it will quickly feed back negatively on the Deutsche Bank partners' derivatives exposure condition. So just to sum it up, yeah, there's a very high chance of it happening, and it will be a shit show. So this is definitely something to look out for. So with the possibility of this happening, or the near probability of it happening, this might be why we've seen quite a bit of money entering the crypto space over the last few months. People most likely are looking for a way to protect their, protect their money. And since the even though a lot of the crypto sphere is speculation, it is disconnected from the legacy financial institutions for the most part. So just like gold and precious metals, cryptocurrency is people are looks like they're using it as a way to hedge their bets against something like this happening. So these next few months should be very interesting. It does seem like Deutsche Bank could be in for some trouble. Everybody knew that this was coming because the stock has been doing nothing but go down. But it is something that could be very, very bad if the entire institution collapsed, considering the derivatives that are involved. $45 trillion in derivatives. I don't think that's the liquid amount. I mean, obviously, that's just what's on the books, but people that know about derivatives still know that that's a lot of money to default on, and it is something that will have an effect on the financial system if something does happen. I would love to know your guys' thoughts on this and how crypto could actually assist in helping people escape a possible financial collapse. Post them in the comments below. If you like the video, please give it a thumbs up. Please share the video. And if you're not a subscriber, please subscribe. I'd love to have you as a subscriber. That's all I got for today. Thanks.